Everyone, and welcome to the Healthy Relationships and Financial Management What's the Connection call. Today's conference is being recorded. At this time, I would like to turn the conference over to Andrea Strahan. Please go ahead.
Thanks so much, and hello, everyone. I'd like to welcome you to the National Resource Center for Healthy Marriage and Families webinar entitled Healthy Relationships and Financial Management, What's the Connection? My name is Andrea Strahan, and I'm part of the Resource Center team. I'd like to thank everyone for joining us today. Before we get started with the presentations, there are a few housekeeping items I'd like to go over. The audio for today's webinar will be broadcast through your computer speakers. Please make sure that the volume on your computer speakers is turned up so that you can hear the presentations. New featured resources that will be discussed in today's webinar are available for you to download from the pod in the top right corner of your screen, designated with the word Files. Please click the name of the file you wish to view, and then the Download button to open or save a copy of the resource to your computer. The resources and videos shown today will also be available on our website, healthymarriageandfamilies.org. To visit our website, click the link in the middle pod on your right, designated with the words Web Links. We will be taking questions at the end of the presentation, but we encourage you to submit any questions that you have throughout the duration of the webinar. To do this, find the question and answer pod, designated by the letters Q and A, in the bottom right portion of your screen. Type your question into the open field at the bottom and then click the Send Question button, or press. You will receive an automatic reply thanking you for your question, and your question will be forwarded to the moderator. A recording of this presentation, the slides, a transcript, and a question and answer document will be posted to the Past Events archive of our website, healthymarriageandfamilies.org, under the Training and Technical Assistance and Events tab. Our speakers today will be Robin Sinizal, Project Director, National Resource Center for Healthy Marriage and Families; Jeff Dew, Assistant Professor of Family, Consumer, and Human Development, Utah State University; Obie Clayton, Donald L. Hollowell Distinguished Professor of Social Justice and Civil Rights Studies, University of Georgia; and Anita McKinney, Extension Educator, Money Management, University of Florida Extension. So with that, I will go ahead and turn the call over to Robin Sinizal, Project Director here at the National Resource Center for Healthy Marriage and Families. Robin?
Thank you, Andrea. And welcome, everyone. Thank you for joining us today. I think you'll find today's information useful for you and for the families that you serve. So today's webinar agenda includes the following. Why is financial management a healthy marriage and relationship skill? What strategies you can use to help clients increase self-sufficiency and strengthen relationships? How can you help clients build assets? How can you help clients increase financial literacy? What is the role of financial management in a healthy relationship? And how can the Resource Center help? So the National Resource Center for Healthy Marriage and Families is a national web-based resource center, and the Resource Center promotes the integration of healthy relationship education skills into service delivery systems as an integrated approach to serving families. We support stakeholders like child welfare, TANF, Head Start, child support, and other social service providers who support families trying to gain, maintain, or regain self-sufficiency. What we offer are research that supports and promotes the integration of healthy marriage and relationship education skills, resources, tips, and tools to use and share with the families that you serve, training and technical assistance to support stakeholders like you as you work to implement these integration strategies. You're going to hear more about the Resource Center later in the presentation, but as we get ready to talk about our conversation with healthy relationships, let's start with a poll question. Which of the following attributes do you think is most important to a healthy relationship? Communication, mutual respect, financial stability, shared values, or no vote? We'll give you a minute to vote. We need Jeopardy music here. Great. Has everybody voted? Like we're still going. Okay, so almost 74% of you selected communication, a little over 19% mutual respect. Financial stability didn't get any votes today, and shared values got a little over 7%. Well, that's interesting. So the answer is really that all of them are attributes. All of them are attributes of healthy relationships. And I'm sure that we could add to that list other attributes that we can think of from our own relationships that we think are healthy. Which one is most important is often driven by our individual perspective, our family of origin, or our personal experiences within relationships. Much like family stressors, we all have stress, finances, parenting, work, etc., but how we cope with that stress differs based on our level of knowledge and our skills. In the natural process, we would learn about healthy relationships, parenting, and financial management in our families of origin. Unfortunately, if we didn't, our system doesn't actually have a place for us to learn those skills later. So what is healthy marriage? Healthy marriage is basically mutually enriching. Both spouses have a deep respect for each other, and it's a relationship that is committed to ongoing growth, the use of effective communication skills, and the use of successful conflict management. So with that said, the Resource Center focuses on the following healthy relationship education skills. We focus on core skills like communication and conflict resolution. These skills support healthy marriages, as well as other interpersonal relationships within the family, the workplace, and within the community. We also focus on critical skills associated with financial management and parenting, as these are often high-stress areas for families. Without adequate knowledge and skills related to these areas, families face greater risk of instability, and this can be particularly true when it comes to finances. So with that, I'm going to turn it over to Jeffrey Dew, who is going to explain to us the role of financial management in a healthy relationship. Jeffrey?
Thanks, Robin. So my presentation will start out with a poll question. Of all common topics couples fight about, which is the best predictor of divorce for men? I'll give a few minutes to answer that. Okay, it looks like most of the votes are in. About 60% selected money, and that's actually the correct answer. In fact, if we move to this graph, this is research that I did. We had a national sample of couples, and we followed them over time, over a 3 to 5 year period. And we measured their marital characteristics at time 1, and then by time 2, we knew who had divorced and who hadn't. And what I did was I wanted to see whether different types of conflict were associated with the likelihood of divorcing between time 1 and time 2. So I looked at money, chores, fighting about in-laws, fighting about sex, and fighting about spending time together. And what I found was that for men, the only type of arguments that was associated with divorce were financial arguments, money arguments. For women, there were 2 types, financial arguments and sex, but financial arguments was still the larger predictor. So for both men and women, as you can see in this graph, the more frequently they fight about money, the more likely they are to divorce. And when I initially started out my research, I wanted to look at how different aspects of financial well-being and financial behavior were associated with relationship well-being for both in married couples and cohabiting couples. And there wasn't a whole lot out there, actually, very few studies on this topic. And what I found was that things like consumer debt, and savings were related to relationship well-being. Consumer debt was associated. The more consumer debt couples have, the more often they fight. Even if we take out fighting about money, people with more consumer debt tend to fight more often. Savings, on the other hand, seems to provide individuals and couples with a sense of financial well-being, which seems to stabilize the marriage. And in fact, I found that the more financial assets that couples have, the less likely they are to divorce. On the other hand, the more consumer debt they have, the more likely they are to divorce. have worked with a student here at Utah State, and she has looked at housing burden ratios. And the housing burden ratios are how much the cost of making housing payments, right, divided by the amount of income people have. And not surprisingly, the higher the housing burden ratio individuals have, the less happy they are in their marriage relationship. And finally, I've looked at actual financial behaviors. So consumer debt and savings, housing burden ratios, those are all kind of indicators of what people are doing with their money. I've looked at how frequently people are saving and how they're managing their credit and so on, how often they're using a budget. And those who use sound financial management behaviors tend to be happier in their relationships, both cohabiting couples and married couples. Here's another slide. It just kind of shows the relationship between consumer debt and the relationship happiness of newlywed couples. So we looked at we followed newlyweds over time to see what they what they would do with their consumer debt. Some brought debt to the marriage. Some came to marriage debt-free. And those who stayed debt-free, all of them, I should say, all of them declined in marital satisfaction over time. That's just kind of the nature of marital satisfaction. But those who stayed debt-free declined the least. Those who started with no debt, started their marriage with no debt, and then assumed $5,000 had the highest increases. So those who paid off their debt, they declined somewhat, but they didn't decline nearly as much as those who assumed more debt. So it was hard for them to pay off those debts, but they fared better than those who were assuming debt. There's some other issues when it comes to money and relationships. I started out looking at things like consumer debt and savings, the actual financial issues. But what I found was that these conflicts over money seemed to be really the strongest predictor of relationship quality, both the satisfaction and the stability. And so how frequently couples fight about money is really kind of a big issue for couple relationships. Now, I haven't done any research on financial pooling, that is, whether or not the couple shares their financial resources, maybe puts it all in one bank account and things like that. But other researchers have, and what they tend to find is that couples who pool their finances, those who share their financial resources, tend to be happier. There are some exceptions. For example, remarried couples that they don't find that. The question is whether people who are happier people who are happier and trust their spouse are then willing to pool their finances, or whether it's the actual pooling that matters. And in a recent study of low-income individuals, they found that those who pool their finances tended to be happier, and it didn't work the other way around. It wasn't that happier couples were just kind of pooling their finances, but these low-income couples who did pool their finances were happier. And finally, there's been some research that suggests that particularly when men are not able to contribute to the family, that leads to high levels of instability among low-income families. So it's the qualitative work that's been done on contributing to the family suggests that particularly the men are expected to be contributing to the family. Even if they're not the primary breadwinner, the men do need to contribute, otherwise often get high levels of family instability. So the big question, of course, is why? Why do we see these associations coming out in the literature? The first answer, I would say, the biggest answer is feelings of economic pressure. These feelings that you don't have enough money to make it to the end of the month, right? That grinding feeling that you've got more bills than you have resources. And so when individuals have consumer debt and when they have high housing burden ratios, they get this feeling of economic pressure, and that feeling of economic pressure then spreads into the other areas of their lives, including their relationships. So alleviating this emotion might help couples. We also see that sometimes fights about money aren't really about the fight, right? It's not really about the fact that maybe he goes out and gets a new gym membership, right? The fight might actually be about the relationship itself. Maybe there's some power issues. Maybe one of the partners or spouses feels that they're, the one has more decision-making power when it comes to finances, and they resent that. Or maybe there's some trust issues, or maybe there's some issues about autonomy and wanting to feel autonomous in how they spend their money. So sometimes these money issues are really reflecting underlying problems with the relationship. And then finally, it may be that that each individual in the couple has different meanings of money. We all have different ideas about what's most important to use money, maybe from our family of origin, maybe as we're growing up. Some people think that status is most important, and whereas others think maybe that peace of mind or fun is the most important way to use money. And so sometimes when couples have these financial problems, when they're arguing with each other, they may just hold different underlying meanings of money, and that's what's causing the problem. So what are some strategies for safety net service providers? I think one of the biggest things is to help clients alleviate economic pressure with some steps. Now, often clients who are seeking safety net service provider help are in real financial trouble, and they're having real financial distress. So we may not be able to alleviate it all, but we can at least help them. So savings, even a little bit, can be helpful. I know that the literature shows that even just a little bit of savings can help reduce some of the economic pressure. I remember when I was in graduate school and I was married and I had 2 kids, I was making about $13,000 a year. This was, we had economic pressure, but my wife and I tried to put, even if it was just $5 or $10 a month away, just to say that we were saving. That helped a lot, just to know, even if we only had $120, we knew that at least we could, meet an unexpected doctor's bill or make a minor car repair if we had to. Debt is, particularly consumer debt, is financially and relationally problematic. So if clients can be helped to make even small payments toward their principal and get that debt down faster, that can help. And finally, it's one thing to say, oh, save some and pay down your debt more quickly. But if you don't have money, it's hard to do that. And so one of the ways to get a little bit of extra money is to cut back on consumption. Rather than getting the large soda at the gas station, get the medium soda. There's a few dollars there. And just cutting back consumption, even if it's in small ways, can help. Now, research has shown that when people save and when people have, even if it's small amounts of assets, it empowers them. They look at things on a longer term. They look at their finances and their lives on a longer term. So having these small amounts of finances can be empowering. Sometimes clients are fighting with each other, and sometimes it's just good to help them take a step back and say, okay, rather than fighting about this transaction or that way she used the money, think about the money and beliefs and attitudes that they hold. To kind of take a different perspective and maybe examine their finances from a different angle. And finally, we talk about communication as being important, and it is a very important relationship skill to have, but sometimes clients don't need relationship skills. Sometimes they need financial management skills. Maybe they need to know how to draw up a budget or a spending plan. Maybe they need to know how to access financial institutions like banks or credit unions in order to meet their financial goals. So sometimes it's not about the relationship skills. Finally, just some additional strategies. There are so many community organizations and services that are available to help couples and clients meet, help them with their finances. For example, Extension often has fact sheets and other help available for their finances, nonprofit groups, and I'm sure some of my fellow presenters will be talking about those. Sometimes they might need help for their relationship issues, and if there are people who are willing to help at a very reduced price, that might be good. I'm going to skip over help for financial issues real quick and go to cultural diversity. Sometimes clients will be making financial decisions that we personally might not think is the wisest, but maybe they're putting money that we think they don't have toward helping family members or extended family members, or maybe toward their religious community. And we've got to be sensitive to the idea that these things, helping family or helping their religious community, might be really important and really central to their identity. And to just say, oh, you need to stop doing that is not going to help the clients. And then finally, a disproportionate number of families who seek social service help are going to be blended families, step families, cohabiting families with children from different families, and need to be aware of the obligations, the financial obligations that these families may face compared to the obligations that other families who aren't blended don't have, and so just to be aware of those. And so now, time to turn the time over, I think, to Obi.
Yes, thanks, Jeff. I enjoyed listening to that. This is Obi Clayton at the University of Georgia, speaking on how you can help your clients build assets. But before we start that, we'll have a little poll question. So I'd like for you to take a few moments and answer, what percentage of U.S. households are currently unbanked? Well, you were close. It seems like the majority of the people are saying 12.3%. We'll give you that, but I think the answer is 8.2. There's a lot of people. That is a high percentage of the population that are out there running on the fringe economy. So what I would like to say, when you're working with these individuals, be cognizant of the current trends among low-income families. Number one, they may not have any connection to banks and credit unions. The unbanked individuals rely on the fringe economy, and I'm sure each of us know what that means. And there are several reasons why people are unbanked and unaffiliated, and this is the most important thing when we're dealing with our client population. Again, there are reasons, and we need to be sensitive to those. Some of those reasons that they don't go into banks, they may not want their identity known. We see that in a lot of instances. They don't want to go through the credit check. And what I've seen quite often, they don't want to reveal how much or how little they have. And quite often it's how little they have. So we can break that cycle by exposing individuals or the unbanked clients to existing programs and services that are out there. We can also educate the clients on the differences between assets and liabilities. Excuse me. For us, that sounds easy, but for them, the relationship between the asset and the liability quite often becomes blurred. A lot of people will say that their car is an asset. It could be, but that's an asset that's losing value. So you have to be careful of these purchases that you make. Jewelry. A lot of people, when I talk to them, they say that's an asset. But it depends on the type of jewelry you get. So we need to work with them and see where that's coming in. But the main thing is to tell them how to avoid those liabilities. And the main thing about avoiding liability, as Jeff mentioned, is a cut down on consumption, cut down on the amount that you spend. And when you have to do these things, make conscious decisions. I think Jeff went into great examples of that. So just keep in mind that keep the liabilities as small as possible and try to grow your assets any way that you can. Now, one of the ways when we're dealing with unbanked clients, the clients that are on the margins there, is to mention to them the existence of the programs that are out there to help them build assets, such as the individual development accounts, IDAs. And these are special savings accounts designed to help low and moderate income people save money without really having to go into their paycheck or go into a second job or any of those things. But basically the IDA is based on the whole premise that if you learn how to do a budget, if you learn how to do a plan, a spending plan, then anyone can save. It's not how much you save. The key is saving something. Now, these IDA accounts come with some strings attached to them. You can use it to buy a home, start a business, get higher education. These are three things that are very important. Buying a home, starting your own company, or furthering your education. That's what these funds were designed to do. And they require, as I mentioned, that the participants attend classes on budgeting, that they learn the difference between assets and liabilities, the importance of saving, and how to make major purchases, including a home, from an informed standpoint would be the key there. Another one that we can say is the Bank On initiative that is growing in popularity around the country. Is a movement or a program that started in San Francisco 6 or 7 years ago and has expanded to other cities and other states. Florida, you'll hear about later from one of our speakers. We'll give you some concrete examples. But the Bank On initiative makes it easier for the unbanked to get into mainstream banking. I mentioned that a lot of people, when you go into your major banks, you have to do a credit check. They're asking all these questions. You have to show proof of residence. Quite often, some of the clients that I've had, there may be 3 generations living in the house. They don't want people to know that they're there, so they avoid the banks and they go to the check cashing companies or whatever. So the Bank On initiative is out there to get this population into mainstream banking. It provides the consumers with the education that's needed to manage an account, how to balance your checkbook, and other little things. But it is a great way for unbanked individuals to get involved with the mainstream banking, which saves a great deal of money than going to resources that are out there on the fringe economy. Now, another tool for asset building, and I mentioned earlier the IDA accounts, but the Earned Income Tax Credit. And for many of you that are out there, you're working with people that are now going to HR Block to get their taxes done, and a lot of individuals, roughly 20% of people that are eligible to receive the Earned Income Tax Credit, they fail to file for. So it becomes incumbent upon us to make sure that we tell them that this is their credit, this is their money, if they qualify. And I cannot drive that point home enough. I mentioned tax preparation companies that are out there. I have seen many clients that will go to and pay substantial amounts to get their taxes done, money that could be better spent elsewhere or saved, when there is free help that's available from universities and colleges in the areas. Even the IRS taxpayer assistance centers will help individuals. So a key here is taking advantage of the earned income tax credit, but also taking advantage of free tax preparation advice that's out there just for the asker. Now, I mentioned when I first started the whole idea of spending wisely. I mentioned people viewing a car as an asset. In some instances they may, but most of them are not in that situation. Or most of us are not in that situation. So when we talk about spending wisely, one of the major burdens of a household budget becomes transportation. Learn how to take advantage of public transportation when and if possible, to see if their employer matches, if they will help pay for the transportation paths, so forth and so on. When shopping for a car, look around. A car quite often may not be the best mode of transportation. It could be a small truck where you can use to make money, hauling stuff, doing stuff for friends, so forth and so on. So make sure that you look at your individual needs when you're looking at transportation, and it is something that all of us have to budget for. The other thing that I see taking a lot of money out of household budgets is the whole idea of entertainment and going out. Going out could be going to a movie, going to a bar, going to restaurants, any number of things that will just zap your money before you know it. So if you're working with couples, tell them they can have fun at home, get a relative to babysit, cook a special dinner. There are just lots of things that you can do at home and make it special. Go to a public park. Go and just look at the skylines if you happen to live in a large city. But all fun does not entail spending money. Shop for bargains. That sounds that's easier said than done for a lot of the clients that you'll be working with, because the big box stores quite often are not located in their neighborhoods. So what we should do is to tell them to get together with the person that has the car or the truck, and 2 or 3 families go out and shop. Look at the stuff that's on sale. Pile up the cupboard. I know at Kroger's where I shop, they always have 10 for 10, and I never leave without 10 of something. You know, that's just a fact of life. One of the things that, and I know a lot of us are guilty of this, that takes a big chunk out of a budget, and you're not even familiar with it because we all have to eat. But if you're eating out, that's for lunch. 1 meal per day can be anywhere between $30 and $50 a week. That money could be cut by, I can't even think of the multiples, if we just pack a lunch at home, put fruit, sandwich, soups, and all of that. That doesn't take a lot of prep, but it takes a lot of commitment. And then we say, well, these things sound simplistic, but one of the keys of trying to change behavior is to keep reinforcing what you want to change. If you hear it enough, maybe it will bite in, and so when we're working with clients, we need to do that. And I think you're looking at the slide on the last bullet there would be grooming at home. We're talking about doing hair, going to the barber shop. I've noticed that it is common on a lot of college campuses that there's a barber on the campus. Well, there are barbers in the community, so we can use the barter system to come in and get this done. You may not be the expert barber, but you may be great at detailing a car. Look at that. You may know how to give a little girl a perm as opposed to paying $85 for that, for the perm. Utilize your friends, utilize your skills, and keep the money in the household. So if I had to leave you with a few points, if any, and that would be, as Jeff said, it's important to save regardless of how little or how much. You will be amazed if you can get people into the habit of putting away a little bit and they begin to see that money grow. It becomes part of their behavior. I know I've worked this with my kids almost to the point of now I've turned out a bunch of Scrooges. But it's just something that they like to look at, and that is something that we all need to do. The third point in working with this unbanked, and I will say working class couples, would be take advantage of those things that are out there for free. Pre-tax preparation is available right now, and this is the time that it may be too late in a lot of instances because people have already done it. But if you're in a situation, just try to see those resources that are available there in your neighborhood. And I'll also drive home the point, encourage clients to do things themselves and to employ the barter system when possible. Cutting costs on basics may be difficult at first, but it is possible, and it is very possible, and the money will grow. The key point that I would leave you with before I turn it over to Anita, and that is just get them on the plan. It sounds tough if they're living from paycheck to paycheck, but it can be done, as Jeff mentioned earlier, simply by cutting back on consumption if you can't increase the income. And with that being said, I will turn it over to Anita, and I'm sure she will give you some concrete examples of programs such as Bank On and IBAs.
Thank you, Obi. My name is Anita McKinney. And I'm an extension educator from the University of Florida. I'm in the Jacksonville area, which is in northern Florida. So before we go into this section, let's poll on how do you define financial security or financial health? What are the three key factors? Looks like the third one is winning here, 60%, but we also have a close second with the second entry. Okay, so we've got most people who've answered the poll, so let's go to the next slide, and we'll be able to see the answer. In the Gutter model of financial health or financial security, the three cornerstones are managing cash and credit, managing risk, and saving. Those are the three components, and then other things impinge on that. So we need to have a good idea of needs and wants. And so every time I have a class and we're talking about managing cash and credit, we talk about and give examples of the difference between needs and wants. It's a good discussion to have because we get into certain habits, and sometimes we even get into the habit of taking care of wants before needs. Resources. We need to know some skills. We need to know what kinds of programs are out there that can help us. And then economic environment, the macro impinges on good financial health. when things go south like they did through the last recession, there's not a lot that we can do about it at that point except working defensively. But we can, by managing our cash and credit at all times, even in the boom times, saving in the boom times, we can reduce the impact that a down cycle will have on our financial health. This part of the program is about a good community network system here in the Jacksonville area that's been developed over the last many years, probably about 10 years now, because I came here in 2003, and at that point the United Way was working on the Real Sense Prosperity Campaign. And it started out as a coalition and has maintained that great coalition spirit through all these years. And in addition to free tax preparation and the IDA program that is handled through our a group called Family Foundations here, which houses the Consumer Credit Counseling Service, which is a nonprofit credit counseling service in the area. Those two programs are a part of our Take One Smart Move with Your Money, as well as financial education. And over time, financial education has really started to take the forefront. It takes a lot of time to get those, the tax prep and the bank-ons and all those programs so that there are programs available. But we've also realized over time that we can help people to get larger refunds, but if we're not also helping them with new strategies for saving, taking care of insurance needs, and managing that cash and credit, then we may not be where we want to be in the end. So here are the key financial topics that we work with, and our main curriculum that we use is Money Smart. It's put together by the FDIC. You can get it simply free by ordering it online. Money Smart, Google Money Smart or FDIC Money Smart, and order the disc. There's an adult and a young adult version. We start out with making ends meet with the budgeting program, which is called Money Matters. We also have other programs through the Extension Service like calendar-based budgeting and effective strategies for managing money. But we train volunteers on the Money Smart curriculum, and that's the one that's readily available throughout the city. So we start with developing a spending and saving plan. We usually hear that called a budget, but we like to call it a plan so that it doesn't sound so much like we're on a diet. Important tracking tools are included in that. And here at the University of Florida, we have a money management calendar that we produce every year. So we're busy handing that out and describing how to use a calendar and the spreadsheets involved to manage money. But there are other ways to manage cash, to use checkbooks and other ways to manage and track. And of course, just as Obi was talking about some key strategies for reducing expenses, we also need to talk about increasing income with maybe more hours, a second job, another person in the family taking on a job. So how do we balance that and actually get it written on paper? Most of this class, they usually start writing the spending and saving plan and then follow up with finishing it up later. The next module is about setting goals. So everybody writes some financial goals, and then we go through saving options. The third area is banks and credit unions and having a mainstream account. So we talk about comparing the costs. If you know how to choose the right bank or credit union for your particular needs, the right account, and then making strategic choices about funds availability policies, understanding that, fee schedules, and having your own strategy for overdrafting, then those accounts can actually be cheaper than alternatives, especially if we're talking about payday lending, but even talking about check cashing and money orders, and prepaid debit cards where, or like a pay card, where there are lots of fees associated with those. Our particular series doesn't include a lot on insurance and risk management. We actually, not so much on insurance, but we do talk about risk management strategies. The next area is building or rebuilding your credit. It's great to try to catch somebody before they get bogged down in credit cards or take on a car loan that they really can't handle. But we also, and those proactive modules are a part of Money Smart, but also needing to know how to get yourself out of it without causing additional issues and problems. Earlier on, I think it was Jeff who talked about the money personalities. So money habitudes, money personalities. There are some online quizzes. We happen to use money habitudes here, which is a little card game to help folks learn what their primary style of handling money is and how that might be different or similar to other members of their family, and how that might lead to conflict or it might lead to harmony. Also, we occasionally use the program called Raising a Money Smart Child. That was developed here in Florida, and I'm sure other issues of that, other revisions of that could be floating around the country. But sometimes with folks that are having some issues themselves within the marriage, or it's a single parent trying to manage their own and having some difficulty, once they learn some strategies and realize that they can help their children avoid issues by being educators and being good models, this does help also. Here in the Jacksonville area, we were lucky enough to come across Ulrich Research Services in Orange Park, and they're donating their services to us for an actual research project we've been doing for a couple of years. And it really is telling us that having financial education workshops helps people to change behaviors. So we asked them to all fill out a survey at the beginning of a series or a workshop, and then if they're going to be a part of that research project, we ask them to give us a contact information for themselves in about 6 months and give us permission to call. So the actual researchers call and ask the same questions again, and we see if there's change. So here you see that the blue represents where folks were in general on the day of the class, and the orange bars represent 6 months later. So the orange bars we're moving in the right direction with everything. More people have checking accounts and savings accounts. More people are actually writing down a spending and saving plan and paying bills on time. More are checking their credit report, and quite a few more are on the road to decreasing some debt. Of course, we wanted the payment of overdraft fees to go down, and you can see here that it does. So sometimes as a financial educator, you worry that, we're teaching all these classes. Are we really helping anybody? And our research is showing that a good, well thought out plan for financial education is helpful and can help change behaviors. We've already talked about some of the resources that you can use and point your clients to. And one is in the area of the free tax preparation. We have VITA sites and AARP sites that work together through the Prosperity Campaign here. And we each take each other's clients in order so that we're meeting each other's needs in lots of different places around the city. Particularly making sure that EITC is available to folks. And one thing that most people know, if they know something about EITC, is that it can be for those who have children. But there's also a lesser amount that can be gained for those who don't have children but have a very, very low income. Of course, we look at deductions for families, and we start out in October trying to remind people not to do refund anticipation loans. We find that that several $100s that just in loan application fees, and then if the application that wasn't done exactly right or the refund wasn't done exactly right, they can still be on the hook for inflated loan amounts. So we really work hard on that. I mentioned individual development accounts before, and we also have through the Bank On and the Extension Service and RealSense, we all advertise the Fresh Start program, as well as 8 banks and credit unions that work with us. We have about 50 folks who come to workshops each month. It's about managing money, choosing and using accounts, managing the accounts, and a little bit on credit. And that Fresh Start program is an outgrowth of Get Checking, which was nationwide and then was dropped several years ago. And we've continued it here in Florida, and we call it Fresh Start. So people can go back and open an account even if they were denied because of credit or previous check systems issues. They can go on and get their account. Of course, we encourage people to get their free credit reports from annualcreditreport.com. And one of the problems we sometimes find is that people are trying to get their reports through the ones that go on late night TV, and really all they're trying to get you to do is pay for a monitoring service. So we want to get the word out about that. If people are working on their credit, if they just want to make sure also that they've not been a victim of ID theft. We're lucky in Florida in that we have the Master Money Mentor Program, which is an individual financial coaching program. So the Extension Service trains volunteers to work one-on-one. Most of our clients for that program come from people who have been to a workshop and then realize that they need one-on-one help with their spending and saving plan, or with understanding their credit situation and working with that. We're also lucky here in that we have a car buying program, Ways to Work. So if there's anybody on the webinar that's interested in doing a program to help people with transportation, this is offered through our Family Foundations program. And the interest rate on the loans that people get are about 7%. So it's not if you had a really good credit score right now, you would just go on the open market. But otherwise, you'd be in the buy here, pay here situation, and that's anywhere from 20 to 30 to maybe even more percent interest rate. You can buy here, pay here, and we don't care about your credit, but the consumers really have problems with that. This also is helping them to build credit because they get a character loan at that 7% for a used car. They're taught how to buy a good used car, have it inspected, etc., and then pay that each month and have a good car that they can drive back and forth to work. We're in a situation in a large city, even though we have large city area-wise, even though we have public transportation, it may not suit, and so the car will be important, and of course in our rural areas around, the car will be important. Many of you are aware of the first-time homebuyer programs, so just be sure you're looking into those. Extension also has nutrition and food buying education programs, expanded foods and nutrition education program. So look into that for your clients. Encourage them to come to nutrition education programs, because we also talk about buying food and having good nutrition. Look into your local utility company, because they will often have energy conservation programs themselves, help with energy, which is always a huge burden for folks, but also they may have education programs. Ours here, JEA, Jacksonville Electric Authority, has wonderful handouts. They train our trainers. We have volunteer trainers that do general financial education, but they also train us on how we can help people to reduce their energy consumption and thus reduce their costs. So those were some examples of programs in one locality. We have quite a few of them, but don't be discouraged if you don't have all of those things in your community. Look around and be a part of the solution by developing coalitions that can bring some of the actual programs or educational opportunities to folks in your area. And now I guess we turn it back to Robin. Is that right?
Yes, ma'am. Thank you very much. Thanks, Anita. That was a lot of great information. So here we are, back to me again. So what is the role of financial management in a healthy relationship? Well, the bottom line is money matters to families. So we heard a lot about financial education today. Financial education can do a lot for families to help them better manage their limited resources. We heard Obi mention 8.2% of Americans are unbanked, which is roughly 10 million people out there. We heard Anita talk about a variety of programs designed to help families with limited resources. We also heard how financial education can reduce risk of predatory lending, things like the check cashing, the rapid refunds and payday loans and all of those other things, which it's really interesting that they are often, those organizations often target those who have the least resources and the least opportunities to go elsewhere. So connecting with these different organizations, like Anita mentioned, whether you're a part of a coalition or you just can reach out to an extension agent within your community that's offering some of these programs, connecting the families that you serve to financial education can be tremendously helpful. We also heard Jeff talk about family stability and the increased risk of divorce, where families are fighting about money and finances. So we can certainly see how financial education can help with that. We also heard about setting goals and developing plans, as Anita says, not budgets, because that's kind of a bad word like diets, but developing plans to achieve those goals, learning how to save a little bit. We heard all three of our speakers today talk about saving and how important it is to do just a little at a time, whatever you can do. So communication. Going back to the Resource Center's position of promoting communication and conflict resolution as key relationship education skills, communication is really key to helping couples and families better manage their financial resources. Couples need to talk about money habits or habitudes, as Anita mentioned, one of the programs, and their expectations. Jeff talked about feelings about money, and he also talked about blended families and their other obligations that they have. Whenever new couples are getting to know each other, it's going to be very important that they think about what are the issues that each of them are bringing to the table around money, their habits. You know, is somebody into retail therapy? What are their expectations? Do they expect to live lavishly? Do they expect to save for retirement? how do they each feel about money, and how is that going to affect their relationship? So in thinking about the Resource Center and what the Resource Center can do to support you, the Resource Center can help you with, as I mentioned earlier, tips, tools, and resources, information that can help connect you to services that can benefit your families. Lots of resources in our library. For example, OB's tip sheet that was mentioned earlier. You can access that through the library, and I think Andrea is going to tell you how you can actually download it off of our presentation today. But we have a number of other resources when you visit the Resource Center website. I'm going to show you a quick video that gives you a little more detail, and then I'm going to come back and talk to you a little bit more about the Resource Center. So with that, Rebecca?
Strong families are the foundation of strong communities. Yet many families you serve struggle to achieve self-sufficiency, and as service providers, you struggle to support them within traditional safety net service delivery systems. The National Resource Center for Healthy Marriage and Families works with federal, state, tribal, and local government agencies to promote the value of healthy marriage and relationship education skills. We encourage their integration into safety net service delivery systems as a holistic approach to strengthening the families you serve. We offer a virtual resource center available 24 hours a day that is user-friendly and easy to navigate. The website also includes success stories and a calendar of upcoming events. Our searchable library has over 300 resources, including research on promising practices that supports the need for and benefits of healthy marriage education skills. The library also includes stakeholder-specific products developed by experts in the field like tip sheets, fact sheets, and research to practice briefs. Visit our virtual training center to learn more about free training and technical assistance, including webinars and in-person and online training opportunities. If you can't find what you are looking for, we have a call center that is staffed Monday through Friday so you can speak to a live person. Healthy marriage and relationship education include interpersonal skills like communication and conflict resolution, as well as critical skills like parenting and financial literacy. These skills serve as the cornerstone for strong families. For more information on healthy marriage education skills, visit www.healthymarriageandfamilies.org, info@healthymarriageandfamilies.org, 1-866-916-4672.
So thank you, Rebecca, for that. So just as you saw in the video, the Resource Center can help with all these different tools and tip sheets, all these different documents that are available in our library, as well as on our website. So for example, when you visit the website, we have a section on asset building. And in that section, you'll find information about things like IDAs, as you've heard us mention on the call today. But there's also a link to mymoney.gov, which links you to about 20 other resources associated with financial education and financial literacy that you can share with the families that you serve. We also heard Anita talk about her connections with all of these other organizations and how they're connected is a type of integration. When we talk about levels of integration, when we're promoting these skills, we talk about things like just information sharing, whether you're sharing simple things like EITC information, a list of the tax Vita sites where families can go and get their taxes done for free, or partnerships would be level 2, where you're developing partners to refer families to so that they can access financial education, such as the Fresh Start or Second Chance banking opportunities, bank-on initiatives, other resources that are available within your community, or 3, which would be a full integration where you're actually integrating curriculum related to financial education into your service delivery system, whether it's Money Smart for Teens, or some of the other curriculum that's out there for free. I hope that you'll take advantage of those resources, and we're going to go through a couple of poll questions, and then we're going to open it up for questions and answers so that you can ask all of our fabulous presenters more detailed information. All right, so our first poll question is, are you likely to talk with others at your organization about integration of relationship education into your current services or role at work? Yes, possibly, not sure, or no. Right? Give me another second or two. Okay, great. Looks like overwhelmingly it's a yes. And our next poll question is, are you likely to use the National Resource Center for resources or training and technical assistance in the future? Yes, possibly, not sure, or no? Give me another minute. All right. And with that, I will turn it back over to Andrea. Thank you so much for joining us today, and look forward to your questions.
Thanks so much, everyone, for your presentation today. At this time, we would like to transition to our question and answer period. And please stay tuned for a final poll question afterwards as well. And we're going to give you the opportunity to download OB's tip sheet, too, once we finish all of our question and answers period. We've had a few great questions submitted, and I'd like to pose them to our presenters. I'd ask everyone to please continue those submitting questions using the question and answer function on your screen. Our first question is going to be for Jeff. And Jeff, the question is, do you know of any studies that look at a correlation between unbanked or underbanked couples and relationship health or marriage and divorce likelihood?
No, you know, that's one of the one topic that really hasn't been looked at is whether people are banked. So no, I don't, as far as I'm aware, there aren't any.
Okay, great. Thank you. Our next question is, and this one could be maybe for Anita or Obi. Anita, if you want to weigh in first, what types of institutions or programs run IDAs? So where would I refer a client to access that type of program?
Well, in our situation, the IDA program was within a religious organization first, and then it moved to a consumer credit counseling service, Family Foundations, and at the same time that we had that one operating, we had another one through a community action program. So they're usually through organizations that are looking for programs specifically to encourage saving and benefit the limited income population. So they can be run out of a variety of different organizations. Obi, do you have some other suggestions?
Just that it's primarily, in the area where I am, it's primarily out of the larger churches that I've seen most of them.
It is a granted program. So if your organization, if you don't have one in your community, look into the resources for asset building and think of doing a grant in your community.
Okay, great. Thanks so much. Our next question, and Robin, maybe you would know this one. Are there any efforts underway to remove some of the tax penalties associated with marriage or being a married couple?
Well, there's Can you hear me? I'm sorry.
Yes, we can hear you.
Okay. I was on mute. I apologize. There are always efforts out there to revisit the tax code, but I'm not familiar with anything specific that I could answer today.
Okay. And just to remind everyone, we are going to be posting this presentation, the slides, a transcript, and a question and answer document in the past events archive of our website, healthymarriageandfamilies.org, under the Training and Technical Assistance Events tab. We're getting a couple questions in about this. I wanted to remind everybody that all of the information covered today will be available on the website. Our next question is, Jeff, perhaps you could answer this one. Are there any studies showing that financial education changes relationship patterns or behaviors for the better? If so, does it matter if only one partner has the education, or do both partners need to receive it?
Yeah, that's a great question and a study that I would love to do. I'm only aware of one study that showed that financial education kind of had a spillover effect into relationships. And what they did find was that, those couples who had financial education did end up, as they put that instruction into play, they did end up in a better place in their relationship. I'm not aware. I think that particular study, both of the partners were getting that financial education. I suspect that just because of the charged nature of money in relationships, that it would be best if both couples got that education, because if they're not on the same page, even if one member of the couple has that knowledge and that that wherewithal now to do it, if the partner is not on board, there may be problems.
Okay, great. Thank you.
I can give you two names that's done a lot of work on economic position and marital happiness, and coined the phrase marriageability. And I would first use William Julius Wilson, and then Ron Mincy's work on fragile families as out, and some of the work that he's doing up at Columbia right now takes that into consideration.
Great, thank you. And Obi, actually, our next question is directed towards you. In your presentation, you said a car is not an asset if it's not paid off. Can you explain that more?
Yeah, just simply an asset is something that's going to gain value. If you go and you buy a car, and your car is $25,000, and you put a $2,000 down payment on it, and you drive it out and you have a wreck, you're upside down. So once you pay it off, you pay $3,400. Your car is probably only worth a fraction of that, so it's not only an asset. An asset is something that's going to gain money over time, unless you've got a collection of something that someone wants, those things. However, what I would do when it comes to a car is to keep it, take the notes that you were paying on that car, because very few people pay outright for it, and pay down other debts. So keep it as long as possible, if that makes any sense.
Yeah, thank you.
And I kind of throw my 2 cents in there. Assets, in a very strict financial sense, can be appreciating or depreciating, and a car is a depreciating asset. However, when you look at what it provides a way to work and other benefits, then in the broader sense of asset, it is, as long as it's providing those benefits, it's an asset to the family.
Yeah, an intrinsic asset.
Mm-hmm. Yeah.
Great, thank you. Anita and Obi, maybe you two could tackle our next question, which someone submitted, which is, How can we increase working wages for our clients?
Can you say that again?
How can we increase working wages for our clients?
That's what I thought you said. I wish I knew that. I would drop it in that speech that we'll hear tonight. I just had no answer to that one.
Many of us who are in the financial education field, especially in extension, we don't get into that policy aspect of it. But for instance, here in Florida, we have the Florida Prosperity Campaign, which is statewide, and they are working on policy, public policy, and public legislation. So that's an attempt here to influence minimum wage and that kind of thing. As we're talking about education, however, one of the things that we always talk about when it comes down to getting a financial plan in place is that if you're trying to save more or reduce debt or just simply make ends meet, it's often that you have to think about making some changes. And we always hit expenses first. I think, well, I could cut out this or do that, and we hit flexible expenses first. Those things that the little decisions every day make a big difference on whether we spend a little or a lot in that category. So we look at ways like coupons or, the dollar store's generally cheaper than the grocery store on some items. So we look at that, but we also look at that we may need to upgrade our skills when it comes to income, that we may need to prove our worth and actively pursue an increase in wages by taking on more responsibility at our job. So until policy catches up in the area of education, we need to spend time talking about how individuals can increase their income.
Thanks, Anita. And this is Robin.
I would say one thing to that, based on what Anita just said, and it just dawned on me, and that was increasing your skills or investing in yourself. And that's done on a case-by-case basis, but there are other states, Georgia is one of them, where if you wanted to go to a technical college or a school, we have a Hope Scholarship where it is free. So you just have to know those resources that are available in those local communities. This one is statewide. They just put more money in that to try to increase the skills. And Tennessee is another state where they funnel money into technical and vocational education.
Thanks, Obi. This is Robin. I would add one more thing. As Anita mentioned, as educators, they don't necessarily get involved in the policy issues, and neither does the Resource Center. But as individual constituents, each of you can get involved within your local government and your state government to make sure that the folks that are in office hear your concerns around working living wage, and that's one way that you can certainly help make change.
Great. Thank you, everyone. I would like to remind you again that we are going to have a recording of this presentation, the slides, a transcript, and a question and answer document with all the questions we received today, posted under the past events archive of our website, healthymarriageandfamilies.org, under the Training and Technical Assistance tab. I'd also like to remind everybody that today's webinar was featuring information found in a new fact sheet from the National Resource Center for Healthy Marriage and Families on Helping Families Build Assets by Obi Clayton. And it is available through our website, and it's also available in the top right pod of your screen. You can see on the slide the green arrow is pointing towards where you can download the resource. So please take a moment to download that if it's of interest to you, and it has all the information featured today and more in there. And please visit our website for more resources as well. So with that, I have one final poll question for you. Please let us know, were you satisfied with today's webinar? Extremely satisfied, somewhat satisfied, neutral, somewhat dissatisfied, extremely dissatisfied. We really appreciate you taking the time to attend this webinar, and we would love to get your feedback so that we can continue to make our webinars better and more useful in the future. So we'll give a few more seconds. If you haven't had a chance to answer, please go ahead. All right, I'd like to thank everyone for joining us today. Have a great afternoon.
Again, that does conclude today's presentation. We thank you for your participation.